right time.
Good morning. You're watching All You Need to Know on Bloomberg Quint Live, and I'm Alex Matthew. First, the headlines. India imposes retaliatory tariffs on 28 imports from the US in response to the United States withdrawing the Generalized System of Preference program for Indian exporters on the 5th of June. Prime Minister Modi calls for an all-party meeting on Tuesday to discuss holding a national and state elections simultaneously. The parliament session begins today. India's trade deficit widened for the third straight month as exports remained sluggish and trade issues between the US and China persisted. Reliance Infra reported its biggest ever quarterly loss after booking one-time hits and impairments worth 8,500 crore rupees. And India got the better of arch rivals Pakistan for the 7th time in the ICC Cricket World Cup, winning by a comprehensive 89 runs. Let's talk about the US markets now. All major indices closed lower on Friday, dragged by the technology sector. Chip makers were under pressure owing to a subdued guidance from Broadcom. The focus is now on the Federal Reserve policy meet that begins tomorrow. Renita Young of Bloomberg News brings you all the updates from that session in this report.
U.S. stocks closed lower on Friday as tech shares dragged down the S&P 500, although the S&P 500 actually closed the week about 0.5% higher. Now, this happened as retail sales data actually posed a little bit more of a positive look than everyone was expecting, and it bolstered the case that the Federal Reserve did not need to cut rates, actually. However, we do still have tensions flaring up within China over trade with the U.S., as well as geopolitical tensions within the Middle East. Meanwhile, we did see chip makers tumble after Broadcom posted that it had to cut its annual sales due to trade war information, trade war spats that cut sales and cut the outlook for the company. As a result, NVIDIA, Advanced Micro Devices, and Lam Research, all chip makers, they all fell on Friday as well. Meanwhile, we did see the yield on 10-year treasuries dropping a little bit, and we also saw the Bloomberg spot, the dollar spot index, rising just a tad bit. The U.S. dollar rose versus major currency competitors, and WTI crude also rose. Now, earlier this week, we heard that there were a swelling piles of inventory for WTI crude. And we also saw that gold actually went just a little bit higher, temporarily tapped an April 2018 high until it fell later in the session. And that's a look at your Friday Wall Street action. In New York, I'm Renita Young for Bloomberg News.
All right, let's also take a check on the Asian markets, some of them just coming online at the moment. Sophie Kamruddin is joining us live from Hong Kong with all the updates. How are you seeing things this morning, Sophie? Good morning.
Well, good morning. Now, this Monday, Asian stocks are set for a fourth straight day of declines at the busy start of a week when we have central bank decisions on tap. Now, this morning, tech is leading the drop in Tokyo and Seoul, with a few news lines dimming the outlook for the industry, from Intel CEO talking of reviewing the company's global supply chain to Samsung not seeing a recovery in chip demand until year end. Plus, Huawei is now reportedly forecasting a steeper drop in global smartphone sales. And also, I want to highlight Japan Display, which is sinking in Tokyo after Taiwan's TPK Holdings said it is withdrawing from a rescue plan for JDI. So we do have the Nikkei 225 just holding steady now, looking little change after earlier sliding. And we do have the Kospi also fluctuating this morning. And here in Hong Kong, the Hang Seng is managing to rise about 0.7%, building higher above 27,000 points, despite losing more than 2% in the past 3 trading days, as we have anti-extradition protesters pushing for the formal withdrawal of the controversial bill and the resignation of the city's chief executive. And over in Shanghai, we are seeing the index stall this morning, off a little less than 0.1% after posting the best weekly gain in 8 on stimulus prospects. Back to you.
Thanks so much for that, Sophie. But US President Donald Trump continues to push for a meeting with Chinese President Xi Jinping at the G20 summit in Osaka this month. However, a senior administrative official has downplayed the prospects arising from those talks. Commerce Secretary Wilbur Ross has told the Wall Street Journal that the only possible outcome from the prospective Trump-Xi meet is an agreement on the resumption of talks. Jody Schneider of Bloomberg News reports.
Wilbur Ross made these comments. He was in Paris for the Paris Air Show and basically said, at this point, the most we could expect is talking about talking, setting a framework for future talks and perhaps a schedule for them. So at this point, he is really downplaying what could occur at the G20 later this month in Japan. And there have been no talks, by the way, since early May when President Trump broke them off, saying that the Chinese negotiators had failed to live up to what they were going to agree to. And he said, as he said several times, he broke the deal. He didn't want there to be talks if China was not going to agree to on larger issues such as technology transfers, intellectual property considerations, those kinds of things. So there really has been no talking so far, and now they're downplaying what could occur potentially at the G20.
Yeah, Jody, to walk it back even further, we don't even know if there's even going to be a meeting yet, and if there is, what would be the most we could expect from it?
That's right. There has not been a meeting scheduled. President Trump last week kind of dared his Chinese counterpart to meet with him. But there's some risks for Xi Jinping about meeting with President Trump, especially if it looks like he would have been bullied into it. So we have not yet heard whether there will actually be a meeting. And it likely would be a what we call a sidelines meeting, that they are both at the conference, they would meet, but not perhaps a full diplomatic meeting. So we'll really have to see. But at this point, there's no further talks scheduled, and there's no even meeting scheduled. And now we have the Commerce Secretary saying he's not so sure much would come out of it if a meeting does occur.
Well, with focus shifting to central banks this week, there's updates coming from the investor community. Global interest rates have peaked, is what the investor community seems to believe, as most central banks across the world are set to meet during the course of the current week. Will the Fed cut interest rates? Will the Bank of England continue its monetary stimulus? Adam Haig of Bloomberg News has more on what to expect.
It suggests that the Fed is going to have to come up with some language, whether it be in the press conference this week on the back of the policy decision or in the subsequent weeks, is around the fact that the market's already very much positioned for significantly looser policy. I mean, if you hit GTV Go on your Bloomberg terminal, you can get access to this chart, which shows you just how much of a move there's been especially in the last 3 or 4 months. And it really is baked into the idea now that without easing from the Fed, you're going to have a serious backup in yields. So really at the start of the week, which is not just going to be defined by the Federal Reserve, but of course Bank of Japan is very much in play with their meeting this week as well. It does speak to a sense now with global investors that have used the bond rally to really get into a little bit more safe haven kind of exposure, that if central banks don't come out with a dovish feel as much as some people are expecting, you could see some fairly pronounced moves in bonds to retrace some of that move.
Now, Sophie mentioned this when she spoke about the Hang Seng trading higher today, about 0.7% about 5 minutes back. But over 2 million people hit the streets in Hong Kong yesterday to protest against Chief Executive Carrie Lam and her controversial extradition bill, which would allow residents in Hong Kong to be extradited for trial in China. Protesters have refused to heed police requests to vacate some of the key roads so that they can be open to traffic. Protesters are basically demanding a complete withdrawal of the bill, which has only been delayed as of now. Yvonne Mann reports from the ground in Hong Kong.
It's looking a bit quiet here on Harcourt Road. Still closed off for protesters here at the moment. As you mentioned, there's still a couple hundred of them still sitting around here after we saw some encounters with the police early this morning. It was an attempt for them to actually try to clear this road in a peaceful manner. And we saw police try a different approach this time around, very different from what we saw from last Wednesday. They weren't in their riot gear like what we saw a couple days ago. Instead, they brought a negotiator to try to reopen these roads. They said, look, this is a Monday morning. People are trying to head to work. Kids need to go to school. Can you please free up this area? We can let you protest somewhere else. And yet we still saw a lot of these protesters saying, look, we're not moving. We still ask for a complete withdrawal of this extradition bill. They're still calling for Carrie Lam to step down. They also wanted the police to retract what they called a riot last Wednesday, the references to the clashes that we saw and led to several people going to the hospital. So it's a bit more quiet here today, but we do still sense a bit of unease here, despite this dramatic reversal that we saw from Carrie Lam on Saturday to back down for now. But for the protesters at this moment, they still think these are half measures.
Well, absolutely. This bill has not actually been shelved. It's been just delayed amid more talk and more conversation, if you will, right, Yvonne? And it's also turning, I suppose, into a demonstration against what is going on with the governance of this territory, too. Is it not, Yvonne?
Right, and we heard from that 75-minute press conference that Carrie Lam had on Saturday, talking about there is no timetable just yet on whether they're going to bring this extradition bill back for a second reading. We've learned that perhaps it's not going to happen this year, but keep in mind this LegCo session and term ends in July 2020. A lot of these bills, especially when it comes to tough legislation like this one, takes months, if not 1 or 2 years, to go through several security panels, committees, as well as that public consultation. So time is ticking. We did hear from Regina Ib, one of the LegCo members, over the weekend saying this suspension of this bill is equivalent to a withdrawal. And some Beijing watchers say perhaps this is a face-saving option for Carrie Lam to back down without a complete admission that they're going to be withdrawing. Also could be a face-saving move for Beijing as well, that they're not completely looking so weak ahead of that G20 meeting as well, and perhaps they're not bowing down to international pressure too.
All right, with that, let's turn back home. Agam Vakil is here to tell you all about the trade setup for the day and also what's happening in the futures and options space. Good morning, Agam. How are we looking at the start of the week?
Good morning, Alex. So we're looking at, well, again, nothing out of the ordinary. A very quiet opening, typical of what's been over the past few weeks. And the SGX Nifty is not really indicating any direction whatsoever. But last Friday, what we saw was a little bit of weakness coming through. And it was not just in the benchmarks, but the broader market indices too, as you can see on your screen there. But let's move on and talk about your banking indices. Again, well, a lot of volatility coming through. What about the ADRs? What about stocks which are listed abroad? Well, Tata Motors and Wipro declining along with Vedanta. Among the other set of ADRs, we've seen marginal gains for HDFC Bank and Dr. Reddy's. But as far as FII and DIF flows are concerned, again, nothing out of the ordinary. The gross numbers themselves remain very low, and there isn't as much participation as you can see on your screen there. But moving on to your contributors, we're keeping an eye on a whole host of financials, including private sector banks, which bear down on the indices. And as far as coming down to futures and options space goes, what we're seeing is a little bit of an increase towards shorts for now. So the Nifty did see fresh selling, and well, as far as the Nifty banking futures go, well, this wasn't any different. In fact, the selling was a little more intense. Let's move on and talk about your open interest distribution. We're looking at a 500-point range between 11,500 and 12,000 on the higher end. And moving on, we're also keeping an eye on change in open interest, where we saw writing around the 11,900 call. As far as the VIX is concerned, well, a marginal rise of around 2%, but it's still way below the mark of 14, so not too much to worry for here. And of course, the Nifty put call ratio came off to around 1.25 versus 1.5. What we also saw was IDBI Bank, Reliance Capital and Reliance Infra remaining in the F&O band. PC Jeweler moves back into the F&O band after moving out, so some shorting pressure there. Besides that, we're watching out for Cholamandalam, Torrent Pharma and PC Jeweler. And in terms of stocks which saw unwinding, keep an eye on Tata LC and Bharat Electronics. But on the whole, it's been a mixed day of trade, a mixed week, and we're likely to see that play out this week as well, Alex.
A lot of international cues to look forward to, not least of which is going to be the Fed meet that starts tomorrow. Thanks so much for that, Agam. All right, let's talk about what's making headlines across the globe. You've seen some of the big headlines, but I'm sure there are a lot more. Sue Keenan of Bloomberg News brings you the first word headlines.
India raising tariffs on a range of U.S. imports in response to earlier measures by Washington. Charges are being put on many agricultural products following President Trump's decision to end trade concessions on $6 billion worth of Indian goods shipped to the U.S. India's decision comes ahead of a visit by U.S. Secretary of State Mike Pompeo, the visit aimed at deepening defense and energy ties between the two countries. Iran, meanwhile, is expected to further retreat from its obligations under the 2015 nuclear deal later Monday. And this is amid rising tensions across the Middle East. The government in Tehran has already increased the rate at which it's enriching low-grade uranium, but it's not doing so beyond the limit agreed to in the 2015 deal. In fact, the International Atomic Energy Agency had said back in May that Iran so far is meeting its nuclear obligations. Finally, to Saudi Arabia, which has joined the U.S. in accusing Iran of attacking oil tankers in the Strait of Hormuz. Crown Prince Mohammed bin Salman called on the international community to take a firm stance against Tehran. This after apparent strikes against vessels, Saudi oil facilities, and an airport. Now, Iran denies any involvement, and Riyadh and Washington have provided no clear evidence as of yet as to who was behind the attacks. Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sue Keenan. This is Bloomberg.
All right, let's shift now to corporate news. Earnings, in fact. Reliance Infrastructure has reported its biggest ever loss of 3,300 crore rupees in the fourth quarter of last financial year. The Anil Ambani firm booked significant impairment and write-offs against its investments in its subsidiaries. Somit Sarkar is here with all the fine print there. Somit, I'm guessing those impairments and write-offs had a significant impact, but what are the headlines?
So if you see, though the company reported its highest ever loss of close to 3,300 crore rupees, the numbers were actually not bad for Reliance Infra. The company reported a 30% jump in its revenue, while its EBITDA increased by nearly 3 times to close to 900 crore rupees. Margins also expanded 22%, but it was the exceptional loss of close to 8,500 crore rupees which impacted the bottom line of the company in the fourth quarter of financial year 2019. Now, despite this exceptional loss of 8,500 crore rupees, the company's net loss was low at close to 3,300 crore rupees, as most of its exceptional loss was adjusted against the reserves of the company. Now, what was this exceptional loss related to? Firstly, the company took write-off against 2 of its associate companies, that is Reliance Naval and Reliance Power. Now, the company also booked a loss of close to 1,740 crore rupees due to loss on sale of investments as the pledged shares were sold by the trustees. On the balance sheet side, if you see the company's net worth, that was down by nearly 37% to close to 15,900 crore rupees due to an exceptional loss that the company incurred. While at the end of the financial year 2019, Reliance Infra's current liabilities were nearly 16,000 crore rupees higher than its current asset. What it means is that the company would not be able to clear its short-term dues even if it were to sell its all current assets. So that's what we could gather from the numbers of the company.
Right, Somit, but that's not it, right? Reliance Infra's auditors also flagged some concerns about the company's financials, like many of its subsidiaries.
Well, 4 of the concerns that were pointed out by the auditor concerned. The firstly was that the auditor raised concerns regarding one of its company in which Reliance Infra has investments and has to recover nearly 7,100 crore rupees. About this, Reliance Infra has also given guarantees worth 1,800 crore rupees to this party. Now, the auditor was unable to obtain sufficient and appropriate audit evidence about the relationship of this company with Reliance Infra and the reason behind these transactions that the company has done. Now, because of which it was unable to determine the implication that could arise in future from this company. Now, Reliance Infra said that it owns less than 2% stake in this company, and this company is a Reliance Group supported company. Now, second one was on Reliance Power. Now, Reliance Infra's associate company, that is Reliance Power, chose a different depreciation method which did not comply with the accounting standards. So that was one of the concern that auditor flagged off. Secondly, Reliance Infra, which not only owns 33% stake in Reliance Power and has invested close to 5,800 crore rupees for this, and it also has recoverables worth 1,400 crore rupees from the company. Now, if you see the current value of this 33% stake of Reliance Infra in Reliance Power is close to 500 crore rupees, while the auditors of Reliance Power have also raised doubt on a company's ability to continue as a going concern. Now, despite this fact, Reliance Infra has booked an impairment loss of only 287 crore rupees when it comes to Reliance Power. Last one was on various other subsidiaries and associate companies of Reliance Infra. Now, auditors have raised concerns on 11 subsidiaries and associate companies' ability to continue as a going concern. Now, because of this, the auditor says a material uncertainty exists that may cast significant doubt on Reliance Infra's ability to continue as a going concern. So, not only on the subsidiaries but also on the consolidated company, the auditor has raised concerns of going concern. Now, however, the company is confident that the various initiatives taken up by the company would ensure cash flows to service its debt and realize its asset and to discharge its liability. Also, one of its subsidiaries, KM Toll Road. Now, NHAI has terminated agreement with this company, because of which all the business operations have ceased to exist. However, the company has not provided for impairment of the value of the assets that the company owns. Now, at the end of FY18, if you see, KM Toll Road projects had a total asset of close to 1,600 crore rupees, but Reliance Infra is confident that they will be able to recover this investments from NHAI, and that's the reason they haven't impaired this amount in the financial year 2019.
All right, thanks so much for that, Somit. Well, let's talk about some of the key stocks that you have to watch out for in trade today. I'm joined by Mishika Parak, who will tell you all about the stocks and news. Good morning, Mishika, and happy birthday.
Thank you so much, Alex. There are a bunch of stocks that we need to look at today. The first one's Mahindra & Mahindra. The company's picked up an 11.25% stake in Swiss agriculture technology firm Gamaya for 30 crore rupees. Now, Gamaya uses imagery to give farmers information about the state of their fields and crops, and this acquisition will enable Mahindra & Mahindra to develop and deploy next-generation farming capabilities such as precision agriculture and digital farming technologies. Then we have Indiabulls Housing Finance. The company has paid interest and principal of non-convertible debentures which were due on June 17th. Also, the promoters have released pledge on 42 lakh shares, which is 0.98% on June 14th, on full repayment of the loan. And there's big news on NDTV. SEBI has handed a 2-year ban to Pranoy Roy and Radhika Roy. They're barred from capital markets, and SEBI has also restrained the two individuals from holding any board or top management role at the company for violation of various regulations by keeping minority shareholders in the dark about 3 loan agreements. BHEL wins 2 orders worth 800 crore rupees for setting up 200 megawatt solar power plants from NTPC and Gujarat State Electricity Corporation. Lastly, let's have a look at the important bulk deal for today. Society General acquired 41.9 lakh shares of Grah Finance at 290 rupees each, and HDFC was the seller for this transaction.
All right, thanks so much for that, Mishika. On to the most awaited event of the weekend. The India versus Pakistan contest turned out to be yet another one-sided affair as India registered its 7th win on a trot against its arch-rivals on the World Cup stage. The much-anticipated rain stayed away for 90 overs of the contest, making intermittent appearances and ensuring that the Duckworth-Lewis method was used to decide the contest. India's 89-run win saw vice-captain Rohit Sharma notching up his 24th ODI ton and his 2nd of the tournament. Skipper Virat Kohli too chipped in with 77 and was dismissed in rather bizarre fashion. He chose to walk when the umpire didn't think he was out. Among the Indian bowlers, Kuldeep Yadav, Hardik Pandya and Vijay Shankar picked up 2 wickets each. India had a slight injury scare as well, with Bhuvaneshwar Kumar hobbling off the pitch owing to a hamstring strain, and he took no further part in the match after bowling just 2.4 overs. India now stand third on the points table behind Australia and New Zealand with 7 points in 4 games, and they remain undefeated in the tournament. The men in blue next play their game on Saturday, which is the 22nd, against Afghanistan. All right, there's clearly lots to talk about over the course of the day. You'll find all the live market action right here on Bloomberg Quint Live. And there are also several stories that you should consider reading on the website bloombergquint.com. Lupin, first of all, let me tell you about that, is recalling more than 18,000 bottles of an antibiotic drug used to treat bacterial infections from the US market. Lupin Pharmaceuticals Incorporated, which is the company's US subsidiary, is recalling the drug after a complaint was received about a metal piece in one of the bottles the drug was being sold in, according to information available on the US Food and Drug Administration website. And yesterday, in an all-party meeting convened by the government, the opposition demanded that issues such as farm distress, unemployment and drought should be debated upon in Parliament. The budget session of Parliament begins today. All right, that's all you need to know going to trade today. Do stay tuned though. There's a lot more coming up in just a short while. This is Bloomberg Quint.